Yeah, may the rates or the jobless rate be ever in your favor, as they say. Oh. Real quick, this will be mindful of risk, especially on a day like this. We had non-farm payrolls before the open, and we've got Uncle Jerome speaking at 2 p.m. Eastern. I'm sure to calm jittery markets that have seen some interesting manufacturing data this afternoon. But that's going to make Friday actually a little more interesting than typical, and that's a good thing. But remember, one of the things that we can, really the only things that we can manage are our risk, and where we set to put that in play. If you're new to profiling and this is a kind of a new game for you, and you think, man, what is this about? What are these guys doing? There's really, as I've discerned, about 3 core ways that people look to express opportunity in markets, and they're fundamentalists. So those are the guys that look at economic reports. They may look at they may look at non-farm payrolls and they go, okay, based on how it behaved, that means we will do X, Y, or Z. I have some friends that do that. They're not very good traders, but that's beside the point. They're technicians who look at specific price actions and certain charts that could be effective. But really, as profilers, we interpret behavior, and we always attribute this over to our buddy at Tom and Corvia over at Blue Tree. We're behaviorists. So when we're looking at these tools, what we're really trying to discern is how are all of the auction participants at all of the different capitalization levels and timeframes participating with these prices, and the profile helps us do that. So I'm Josh Schuler. I'm the founder of Trade with Profile. JP may join us. I know he had an engagement early this morning, so if he jumps around, we're kind of the genesis of our development team. We also got Cody here on the call with us, who's a new part of our team. We're excited to have Cody. But everything that we do is built around something that we call our profile trading development pathway, which is really built to help get someone to consistency. So if you ever want to know, if you ever want to know, okay, what are those trade profile guides about? We're really about trading consistency. Make sure that we distinguish between trading consistency and never losing, because that does not exist. You will not have every trade win, but if you can be consistent, and it is possible to be consistent in markets, to consistently win, you can succeed. You can do this as income. You can do this as a way to grow wealth. And our job is to help you get to consistency through the lens of our pathway, which is really built on these 3 ideas. If you can master these, you're on the path towards consistency. One is the 4 behaviors observable in every auction and how to observe them. There's a beginning, there's a move, there's rest, and there's a test. That's it. There are 4 questions to ask and answer before you put a trade on. What is the opportunity? What am I willing to risk for that opportunity? What would tell me that I'm right? What would tell me that I'm wrong? If you don't answer those 4 questions before you put a trade on, you should not place a trade. I mean, you want to make yourself immediately better as a trader. Ask and answer those 4 questions of yourself before you put a trade on. I guarantee you'll see an increase in your performance. And then finally, the 4 stages of auction competency and how to know which one you're in. Are you at a stage 1, which is an unconscious incompetence, where you just don't know what you don't know? When I got into trading, I had no idea what I didn't know. And I love this business. There's always new things to learn. You have to continue to evolve as a trader, or your edge will be arbitraged out, guaranteed. So there is a grow or die perspective with trading, but really, I mean, that's any business. And we think about trading as a business. But we're trying to get to stage 4, which is a unconscious competence, where you have inhabited your process, your approach so well that it's instinctive, and then that's where it really gets fun. But you have to go through process to get there. So we express that with our trading community through something called a trade plan. Every day we come onto the battlefield of the markets, and we have to have a plan. Now, like most battle plans, for those of you who have military background, you know that once you're on the battlefield, things and variables change. But it was the planning process that prepared you to address those changes. And when you see things go as you had intended, it can give you greater confidence to execute in the field of play. We do the same thing, and it's a way to show, hey, these aren't just hollow concepts, but this is how we put these to practice. Okay, so with that, we'll jump in. We're going to get over here to markets. I think we've got some interesting stuff brewing, and just going to take kind of a high view here, we're into C period in the equities and a D period in crude. We're about to take out the initial balance low in crude oil, which is interesting. We've been talking about the potential for, and I can tell you what I'm going to be looking for here in crude, is if we can take out the low here, I'm going to look for rotations up to the current day's value area, and then I'm going to be looking to target 52.67 and 52.35. If we take out that low, that's what we call neutral behavior, because we've already taken out the IB high, and so that increases confidence in the shorts. We did open with a gap that we could easily eat into, and those are two areas that are reasonable targets. Now, if they don't give us a chance, to pull back before we go, then we could look for potential responsive longs at 52.67. And the one that I'd really like is I'd like to be long down here at 52.35. So let's keep an eye on that. NASDAQ has also gapped higher on non-farm payrolls, is still trading inside of its opening range. The volume early was strong. It's now gone rather light. You can see we're flirting with the open price. If we can get below the open, we could close the gap, and we're looking to get down into this area. So that will be, where same deal. We'd look for pullbacks, and we would look to go with expression that way. If they don't give them those, then we're going to look for, buyers to step in this way for rotations later in the day back this direction. If we take out the high, then we're looking for 77.75 as a target higher. And if you're an ES trader, we'll just go over there and look. I'm not an ES day trader, but I do trade the ES on a swing basis. And I'm looking for IB high extension to take us to 29.40, which would get us up here. And then IB low would take us down to 2900. Overall, the lower stuff is the expectation. We've had two significantly strong volume days. Yesterday, unless we can confirm it today, yesterday, in my view, was a short covering rally. They used the ISM number to trap some new shorts and then squeeze them. So now we're looking at a better price to potentially get short. That price may actually be up here. And then target one on the downside would be 28.87 before. Eventually, I think we're going to 28.30, 2800. But as markets don't move in a straight line, we have to be patient around that. So with that, now we're gonna stalk and see what opportunity is provided to us, if any. And if you have any questions or want to look at specific products, we're happy to do that. Some quick, one of the questions I typically get is, what are the platforms that we're using? So the platform you're looking at right now is a platform called Window Trader. Is an exceptional profiling platform. It allows you to do stuff like this where I can layer different time frames and hide them if I don't, so often I'm looking to trigger off of a 30-minute behavior, and I don't want to be lured by smaller time frames until the conditions are there. And so I can just hide it. This is the market profile with contract volume, and then a current daily bar. This is a volume profile that shows the accumulating volume for the last 5 sessions. Kind of like to keep about a week of composite information out there. And these profiles here are colored by intensity of volume. So it's the top 20% of volume. So that helps you really clearly identify where are the larger volume areas. And it splits between the overnight profile and the day profile. As a general rule, when you're talking profiling, we use volume profile, which is this stuff, to help us find areas of interest. We use market profile to set expectations of how likely it is that we might interact with those levels on a given day, and helps further refine our plan. We introduce things like open types and day types, which in auction theory, there are 5 open types and 7 day types that are correlated. And based on how an auction opens, can set the expectation for later. So, for example, actually in both crude oil and the NASDAQ here, we have open auction outside of range. So that's actually a directional conviction on the open. We just don't know. And that, if we get IB high, that typically would lead to significant extension. That's why I'm looking for that 77.77. If we take out the low, all of these aggressive buyers on the open are now in trouble, which could take us down to 76.30 area. Similar thing here in crude, and it looks like we're about to take out the IB low, which means, and let's just see how wide. Yeah, we've got about 47 ticks. That might actually be a little aggressive here. Get my dome ready. On IB low, just if we go neutral, what is that low? I know what that price is to the, let's get to 283. All right. So typically when you have a tighter initial balance like this, if we take out the IB low in crude oil, we might get some excursion pretty quickly, and run to that 52.65 rather quickly. We're still inside of overnight range. About 97% stat that we'll take out the overnight high or the overnight low. So if we take out the overnight low or take out IB low, then that could definitely put that 52.35 on deck as we move towards that. It could even go to 51.90. We'll just have to see. Other anatomy. So this number that's changing down here below the contract. So this is contract volume. This is actually the difference between buyers and sellers volume on the bid and the ask, which is currently a negative number. So even though this is a positive number on this platform, this is a negative number. So we actually have had, so we gapped up on buyers, and since then we've only had sellers in control, which is why we're struggling to make any higher prices. So that's increasing the potential that we could take out the low, which is why we're watching the open. The Russell, let's go over here and look at the other indexes, because the Russell has taken out its initial balance low. ES has made at least a lower low in a 30-minute, as has NASDAQ and the Dow. Not really seen a pop in the VIX yet. So that the Russell has definitely been the leader. And if you didn't catch it on Tuesday, we did. You can go to the blog, tradesprofile.com/blog. We did a Q&A on Tuesday, and we were looking at some longer-term charts. Take a look at that. Take a look at some prices in the Russell. We're kind of watching this 1450 to 1600, which is something that we've just been bouncing back and forth around. Okay, so I'm going to be a little bit short on the break here on crude, and would be willing to add up to that 53.15. I'd be wrong on everything above if we take out the 35 area again. But I'm looking for 42.70 as a first target. Really looking for 52.35 would be the more exceptional target. And the only reason I'm aggressive here at the low, now this won't be a full position, but the only reason I'm aggressive here at the low is because of the tightness of this first hour's range, and the fact that we're coming back now and extending it in a neutral behavior. It's a change in control, and yeah, 52.65 should get there pretty quick if they punch through this. All right, NASDAQ's coming back. Okay, so we're short crude. Yep, there we go. And Okay, so this is going to quickly go down here to 52.70, then we'll kind of see. That should hold it for just a second. And if they push through that, then we know that the bigger level is that 52.35. So in terms of where am I wrong? Especially if we get a lower low on a 5 minute, then I'm gonna defend the top of this spike. That would be my stop. So I'm not gonna let the stop go all the way up here now that we've had favorable excursion on this trade. All right, come on NQ. Let's see something fun. So we've got a little bit of a tight initial balance also in the NASDAQ. And we're right about average volume for the day so far. So with that negative order flow, and this is actually pretty significant attempt at that low, but I want to see him break that low first. Aaron, do you mean my execution platform? Yeah, I can't, and it's not a transparency thing. It's just, so when I do these things, I actually have my execution on another machine, just to I've had Zoom freeze my machine before, and a bad risk, bad risk would be that this machine freezes and then I'm in a trade. So it's actually, I've got two machines running, and it's on the other one here. But I can tell you the platforms that I'm using. So Photon Trader through Future Path, so Damon Pavlotis output, and then WebOE through RJO. And then I've got a stage 5 account as well that we're trading off of that. I hope that makes sense. It's just a risk management thing for me, because I've had this thing lock up before, and and then I'm locked in a trade, and then it goes south, and when you're trading with some decent size, it's just not wise. Okay, so I got filled on that, guys, at 82, and my initial stop right now is the top of this 5 minute that we just came out of, right here around 95. Yeah, so it stops 95. And by the way, if you're a one lot trader, okay, so because target one was at 52.70 on a one lot, you took the trade, you took it off. On a multiple lot position, you were taking some off, and then you now have stops above that high. That's how you can, even if you get movement like this, because impulsive activity should get follow through lower, and if it doesn't, then you need to be out of the trade. That's why that stop is right above at 95. Okay, NQ defended the open yet again. so we're back to the waiting game. Back to the waiting game. All right, are they going to stop us? We shall see. And this is, guys, this is a little trick if you understand this. So like on an entry here on the IB low, if you take half your position off at the target, if you have multiple contracts, then what does that allow? You can basically take this up here, right? That's now your cost basis. So if I have stops here, even if I get stopped out, I made money. But it's unwise to put on multiple contracts if you don't yet have a process. Now, what's great about the crude oil is that you can trade 2 QM equals 1 CL. Now, I know that the price, there's a little bit of price slippage that occurs. They're not as attractive yet as the micro contracts and the equities, but that is a way that you can start to size up without really increasing your risk. But if you want to be really small, you can just trade 1 QM. There is talk. I know that got some colleagues that have been pinging the CME to do like-sized contracts for crude. So do some different micro contracts rather than the QM, and sounds like they're receptive. I mean, I think the CME is really just really excited about how. And we're gonna get stopped. I think they're really excited about the volume. Very surprised at how much people have enjoyed those products. They've been really, really great. If you know, and here's kind of my deal. If you're okay, so we're back to sidelines and crude. Picked up a little bit. We can reassess. Okay, so like if you're not yet consistently profitable, here's a couple thoughts. If you're not yet consistently profitable, I encourage you not to be trading live. Okay. There's significant research out there to suggest that you are only setting the stage for further failure and wiring your brain for failure if you add live risk while you yet don't have the confidence that you're consistently profitable. Once you have a process and belief and have done the homework to be consistently profitable, then you start working on we always work on consistency, then we work on sizing, and then we work on breadth. So start as small as possible. That's what the micros would allow you to do. I mean, Cody here on the call has done a really, really good job trading the micros. And it's actually even allowed him to as he's building his account, allowing him to trade larger and think like a larger trader by trading M and Q, as opposed to trying to trade 1 NQ contract, but it also keeps its capital risk. So you start, smaller products. That's what the micros are excellent for, as you're getting used to the tempo of the market before you can go to the larger contract with greater capitalization. But if you don't yet have the confidence to be able to sit down every day and say, yep, I have an idea and I can extract capital from the market and I've got good odds of being able to do that, even knowing that I'm not going to be 100% right, then do not please put live money on the line. Well, I was getting excited that we were going to take out the low in the NASDAQ and we were going to run. So now we're kind of back to our waiting game, and two different ways to approach this. If they take out the initial balance high, then I'll look for a pullback back towards value to express towards this direction. If they don't give it to me, then I'll just look for this and then fade that way. We've seen some buyers step in and take some of the mojo out of the sellers, to be sure. Another reason to be aggressive on the stops on crude oil is notice that the day's value was here, and if you want to increase your consistency, one simple rule using the profile is that we look to buy above or below value and sell at or above value. So in selling this at the low, you can see I was selling below value. That's also why my size was smaller, and why I would wait for it to come back toward value to add additional size. And that's still an attractive opportunity. Now, however, you know, depending on whether we can get a higher high or a lower low on a 30-minute, if we take out a higher high on the 30-minute up here, we trade up here. I could look for some sellers for rotations back down. I don't know now that we'll retag that if we get a higher high on a 30-minute, but that could be another opportunity yet intraday. But now I'm going to wait. I'm going to wait for that value. Now, if they roll over and they run down to 52.35, that still is an opportunity for longs back in this direction. So, I mean, you see, we play a lot of if this, then that kind of deals. Tony said thanks. Is that is that just thanks for the tip? Okay, yeah. Okay, why am I targeting the 28.20 for swing low on ES? Why not the overnight lows from August 7th? Overnight session seems like that's unfinished business. Well, let's just look at the long-term chart. So it's a good question. So let's pull up the. Oh, by the way, here's this Russell chart, and you can see this 1450 to 1600 bracket. So I mean, we've just been playing, you know, above and below this thing for a long time. Eventually, I mean, I think the longer term move is once they can accept outside of that. So we'll wait and see if and where that occurs. But let's look at the ES here. So if we go off of the December lows, and these are weekly bars here. There's a very prominent node right here at 28 or 29.30 that we're below, right? Here is 28.90, and then the next really significant node is in this 28.25, 28.30 area, and then below that, kind of starting from 2800. So that's why, you know, in a longer term profile, I'm not as concerned as the really small references as I am the larger nodes. Because again, you know, I'm not a day trader on the ES, so as part of my plan, I'm looking for these larger moves between these larger nodes, and those are the nodes that have you know, specific significance. If we look at the larger bracket that we've been in the ES, which really dates back to here. This even further refines the story. Oh. You know, of why that was a big level that we broke below, and why this 29.30 area is significant. You know, which is essentially, you know, where we're trading. So I said 27. Yeah, that's going to be a level down to the downside if we break. So these are just longer term levels. I mean, you keep those on your charts and you pay attention to them. But does that help, Aaron? I mean, it's a great question. I mean, when you are building your plan, here's my thinking on like untested inventory, like from, you know, those are definitely references that you would carry forward. You know, you'll hear Dalton and Pete Reznicek, you know, talk a lot. Well, and because Pete has been greatly influenced by Dalton, they'll talk about unfinished business and, you know, poor lows like that. And it's been my experience that we absolutely carry those forward as references. They're just not like I wouldn't get short here based on an expectation that we're going to go get that low. I think there's not a lot of wisdom in that. I think the larger wisdom is to say what's the larger level. I mean, at least it's the way I trade it, and it's been helpful. Um, I can have more expectation in a large high volume node, which is why we use high volume nodes as our decision levels, because they allow you time. You know, there's a consistent expectation if I get a high volume node that the auction will slow when I get there, giving me time to make a decision. A reference like a unfinished overnight low, that definitely I would carry that forward and say, okay, yeah, there's some unfinished business there. We may reengage at some point, but I'm not going to short into that expectation of that we're going to go clean that up. I hope that's helpful. It's a great question, and it's a great aspect of structure to keep pay attention to. Similar to things like naked volume points of control. So when we come into the auction, the very first reference of value for the auction when you come in each day is yesterday's value, and then it cascades out from that. So like for example, today the most important reference of value for the ES when we started was 28.88. Well, it also happened to be the most traded price of the last 5 sessions, so that you got kind of it's value for yesterday, it's value for the last rolling week. And then what the auction's got to decide is that value, does it want to accept that value and return to that value, or does it want to test other prior values? I mean, you can see I've got a level up here at 29.40. That 29.40 to 29.46 is because that's untested value in business from 3 sessions ago. So if we continue to accept above yesterday's value, then that magnet of that prior value from the first starts to pull harder, and that can help set better expectations around that. Well, we're just dancing here. We're still waiting to get outside of that opening range in the NASDAQ to give us an idea of what we're going to do. Now I've got alerts up here in crude oil, so I can actually turn crude oil away, and I can set some alerts around 53.16. See if we can get up there. Or I'll start looking potentially for the responsive long. I mean, really that 52.35, because that gets us back into the prior day's range, might be a better place to look long. That gap is still open. Another thing that we'll kind of watch is we'll see if they can migrate. If we can do, you can see we're kind of doing a little bit of balance down here. If we can do enough of that we could migrate the point of control lower, that would also make rotations higher more favorable to sell. But that would be confirmation of accepting the lower prices. We haven't done that yet, so that could lead us back up here. Yeah. So Aaron mentioned that everyone targets gap fills. They do, and just so we're clear. So when I market gap, I market gap from one RTH level to another, right? So that's a gap. An open to a close, I don't consider that a gap. I'm purely looking for different ranges, and yeah, people will target gaps to be closed, and just like unfinished business, just like they're references to carry forward, but they are not guarantees. Like there's no trade idea around that. Because let's also think about, like, what does a gap represent? I mean, the fact that we've not yet closed this gap after an hour, the probabilities now that we're going to go close the gap are shrinking every minute that we do not move back through the open. Because it was a directionally convicted higher open. We're now holding those prices. So that's the control. That's why I would want to see trade below 76.82. I mean, there's a better chance that if we get below 76.82, we could close the gap today, just because the gap is not significantly wide. But if we take out the IB high here, as it looks like we're intending to do, I mean, now we'll reduce that 76.82 print to like 30%. So I would then say, yep, very, very likely we could goose to 77.72. Now, the only thing that could change all of that is that we do have Powell speaking at noon today, well, noon my time, 2 p.m. Eastern, and that could significantly impact direction and throw in new information to the market that could cause a change. It's likely why we're just kind of trading in place. It's because everybody's waiting for Powell. You know, like how does Powell interpret the jobs data? And you know, what are we going to do about that? Yeah, really nice clean move off of that area. Oh, this is a great question. How does one validate one's trade plan as the market changes? Well, one is to go back and look at your plan and see, you know, what were there certain levels that you were looking to interact with? Have we interacted with those? You know, I typically have a number of cascading scenarios that I'm looking for, you know, in terms of probability. And, you know, like, well, how do I set the probability? Well, some of that's just experience of, you know, which one's more likely. When you don't yet, you know, have as much experience, then, you know, what you're often doing is you're just writing a number of scenarios. So that what you're doing is you go back through those scenarios and then you say, okay, which one can I rule any of them out? So if I rule them out, now all of a sudden I can have greater confidence in the ones that remain. You know, just like today. And then there's now contingencies of, because I have not yet extended the initial balance in NASDAQ. I mean, 77.77 could be in play, 76.32 could be in play. I have no idea which one. I've got competing information. I've got a gap that tells me there's buyers, the cumulative delta is the buy side, but intraday I have had sellers in, you know, tight rotations. So, and then I've got this, you know, binary influence later in the day. Most likely now the best place to look is just to say, okay, and in my plan this morning, 76.32 was a level that could be in play, as was a 77.72. Okay, well, I almost, since we're at balance, rather than trying to catch the break from balance here, I'd rather see them push away and see if they can continue. And specifically, I'd like it to the upside. If they push to 77.72, some other things kick in. We've already done about 88 points of range in the NASDAQ thus far. We were only expecting 107 points. So, you know, any push higher starts to stretch you statistically in terms of range and get you outside of those probabilities, which could invite the machines to step in and turn you the other way. Yeah, spot on, Aaron. Yeah, today's profile is pretty balanced, you know, trading around that developing volume point of control. So it, you know, and what does that tell us? In fact, this is what we were working on this week as a community, is that, as you know, as Pete Stottlemyre's research shows, moves begin from balance. Well, balance can be measured in lots of different ways and in different time frames. There's the day balance, so we've got balance taking place. We know a move's coming, so that's the key takeaway, is there's going to be a move coming. We just don't know which it was, and we don't know if the move once that move begins, will it be accepted or rejected? So that's the next thing, is once we see the move, then the question is, do they accept it? We monitor it for continuation. If it is, then we can have the opportunity to go with it. If not, then that traps some people and it can give us confidence in going the other way, which means it's a great day to, I don't know, go for a walk for a while, just set some alerts and and then see, read a book, watch a movie, have a Q&A. All right, Crude's attempting back towards that IB low. They're trying to pull that point of control lower. Let's see how much business do they need to do. So we got 4,200 contracts at the VPOC. So if they trade, you know, a little bit more down here at 52.93, they'll move that. In fact, let's just kind of watch. They still need 100 contracts, and then they can. There you go. See now we've got the volume point of control has just moved lower. So that now gives us, prices higher that fail have advantage. That's good trade location. Feels like they want to go. It's 52.65, it's 52.39. So totally plausible that we could get to 52.39, which would be 2 times extension of that initial balance. Would also close the gap. Wait for the next tweet. He was tweeting this morning and I didn't really see any interaction around it. I think we're actually starting to get rid of the tweets as an impact in the market. Which I would love. I would love for that to stop being a market driver. By the way, like in terms of prediction of auction behavior, like the auction can be fairly predictive in the auction behavior. There's things that you can layer on that to set those expectations. But in a world where you have, some kind of tweet that can come out through the day, if the tweet hasn't yet happened, I think that's something you got to have in your trade plan. Is the tweet, the binary event, or whatever hasn't happened. So up until those events, because that's new information interjected in the market, there's less confidence in where we might go. That's why, like as a team, we never trade before, like Wednesday of FOMC day, we don't trade. We wait till after the release, after the press conference, and then we see if there's something. Because once the news is out there and the machines do their stuff, then we kind of go back to a typical auction process. We've also reduced the probability that we'll see additional items like that, which means it's more predictive. Whereas today, everybody's waiting for Powell, and this is just kind of, it's tough. And I think what we're finding is that Powell is going to be more impactful to the market than non-farm payrolls was. Fascinating. So is everybody on here? Are you all NASDAQ, Crude, ES traders? Anybody trading other products? I know those are Natty Gas. Let's go look at Natty Gas. All right. Did you trade Natty Gas today? Natty Gas is definitely not one that I day trade. This is one of those, on inventory. Okay, gotcha. Yeah, so by the way, if you like trading EIA in Crude on Wednesdays, natural gas is in inventory on Thursdays. Similar type behavior that often produces, as you'll see here on this profile, what we call neutral behavior. And this is actually a pretty good behavior to look for in the market. So, here's the inventory move. Everybody gets trapped short, then they come back through IB high and accept around that. That's a good place to watch order flow and so forth, because that often leads to a squeeze. Because and I don't know, Aaron, was the inventory a bearish release? Yeah. So what often happens is that somebody will. So ultimately, future price and fundamentals do converge, but also realize that a future is a future. So sometimes things like a bearish inventory report were priced in the expectation of that, but there are still people who read the report or algorithms that read the report and they try to get a move, right? I can't tell you how many times I've seen a bearish report lead to immediately lower prices that then fails to get follow through, and then they squeeze them. So I mean, this is the type of place. this is where you can definitely, if you can be patient. I mean, you can see just how much they squeeze this being wrong off of that initial move lower. Yeah. All right, somebody's got a hand up. Let's see. Oh, there he is. JP's here.
Hola.
There he is.
It felt like I was back in school, raising my hand patiently back in the back row, man.
That's awesome.
Hey guys, sorry I had a previous engagement that I had to take care of this morning, which I'm sort of glad because I didn't miss anything this morning.
Yeah, very much. Man.
Good stuff. This was sort of expected. I mean,
yeah.
I wasn't expecting this kind of rotation at this, but with Jay Powell being on the board today, unexpectedly, this was all of a sudden expected. So
yeah,
cool. Well, maybe a no trade day because he's speaking late today. Is that right?
Yeah, 2 p.m. Eastern. So unless he speaks quickly, we might be on the sidelines. Might be an early weekend.
Yeah, I'm okay with that.
Yeah, we got a little bit of a move in crude, which was fine. But
yeah, which move did you guys work?
So that we took that tight IB break in the crude oil, to that 52.71 area, and peeled some off. We're looking for further extension. They popped back, and now we're just kind of waiting. They may be done.
Yeah. Were there any other questions?
My cattle aren't going anywhere. Man.
Yeah.
Let's go look at the big board and see if anything else is.
Hey, Josh, pull up a longer term profile on the ES or the NASDAQ.
How far back you want to go?
Probably the last 3 or 4 months.
Okay. Let's look at a daily here. Yeah, daily. There you go. Yes.
Yeah. So where can you throw a profile on that left chart or no?
Absolutely. Let's actually just look at this. This has been the most recent bracket that we've been in.
Yeah, that's exactly. Okay, so we're trading, what's that? So we're trading at
29.31, right? Yeah. So right around this node here.
Yeah. So guys, I want you to take a look at this because I think it's gonna be very helpful for you. We're right in the middle of everything. So which means that we can get it just means we could have a lot of rotation still until we haven't found a direction now since May, April. Okay, so we've been just rotating back and forth here. And one thing with when you're trading, I think the biggest thing that you have to watch for is when to trade and not to trade. And right now, this thing's just doing a lot of rotation, and we don't know if it's accumulation or distribution at this point. And we won't know until we find that direction.
Yeah.
So when we see these moves like we saw yesterday into today, and we saw the moves from last week into yesterday morning, I mean, we dropped, what was that? Let me see, what is today? I don't know, today's Friday?
Yeah.
So Tuesday, we dropped we had a high of 78.42 on the NASDAQ, and then we bottomed out at 74.74 and some change. So we're talking almost 400 points there in 4 days. And now we've popped back up about 200 points from that bottom. So that's a lot of back and forth. And if you're stubborn with stops and stuff, that can get you in trouble quickly. So understand, or guess where I'm going with this is just understand the large context of the market and where we are. We get so looking at our 30 minutes and our 5 minutes and our 60 minutes that we forget to look at the bigger picture. And I would encourage you at this point, because I was looking at that last night and I was like, okay, wow, we're right in the middle of the mess. So it could get still choppy. We're going to have these weird moves because everybody's fighting for control. And that's what markets do. So if this is not a good area for you, then feel free to stand on the sidelines. There's nothing wrong with it.
Indeed. Yeah, so we're trading what? So we're trading right on this node.
Yep.
Right on it. All right, crude's expressing further lower. So we're looking for that 52.35. If that doesn't hold, they could look for 51.90. Those are potential areas I'd like to see some potential rotation higher. Target would be, on any long, would be 52.93. Gold. Let's look at some gold. Let's look at it from since we've broke out. Which levels are important there, JP?
Gold, it's wicked, yeah, but you can figure out the levels real quick. I mean, that's obviously listen, it doesn't get any clearer than that, other than somebody taking your hand and drawing it out for you. So, but that's what gold does. That's why gold sometimes is a great trade. If you get the right direction on gold, you can pop on a swing basis pretty darn quickly.
Yep.
So gold
we're right at 50. We're right at 15.12 right here. This big node.
Yeah, boy, they're selling crude off.
Yeah,
right here. So
yeah, they're getting the gap close. So we've pushed through 52.70. So we're waiting for that 52.35, and then we'll see. We'll see what they do. Value's higher for the day. So this is kind of pull back to a longer term value. This is really the move that we wanted, but I like how we executed on it.
Yeah, very good. Congrats if you guys got it, because I did not. That's fine. I'm okay with that.
And that's a key. I mean, that's a key insight into consistency. You know, because I mean, obviously, guys, we're getting further excursion here since we put that trade on. You're like, well, hey, why aren't you getting? Why don't you have all that? That's like, well, because it wasn't how I constructed the trade, based on the risk available and the target at the time. You know, so we took what we could have, really good expectation on, and if we get down to that 52.35 and it sets up again like that, we'll do it there. Where you can get yourself in trouble is you'll see, like some big move and feel like, oh, well, I should have been able to do that, and often you ended up exposing yourself to too much risk, which at the very top of the hour we talked about, hey, the only thing that I can control really is how much I risk and where I put that risk on.
Oh yeah. And really that's all you can do.
That's all you can do. That's all.
Anybody have any questions?
So this is an oversimplification, Tony, on on gold, but I mean, right around this 1512 area. Daily closes, weekly closes above that can support moves to at least test 1566 and then higher. Daily, weekly closes below that can get us into this low volume area. And if they don't reject out of that and push through, 1425.
Yeah, and even though it is overly simplified, really sometimes that's what you need to do. I mean, it's if you see the opportunity to break from that balance, because if we understand, just look at that profile on the left, that's exactly how markets work, right? Markets, they balance and then they break from that balance and they auction, and they're looking for one of two things, right? They're looking for acceptance, again, a new place to accept prices either higher or lower, and then migrate value over time. Or what they do is they find sellers and buyers, like we did yesterday. They auctioned out of a small balance area yesterday on the ISM number down, and then they quickly bought it right back up. They found the buyers right there, and then here we are today above yesterday's high. So with Goldie here, she either continues to balance here and then move to the upside, or she's going to slip and fall and boom. And it doesn't take long for gold to move down to that 14-18 level. So that's what markets do. And if you're able to find the trigger, the way that works, I mean, we always talk about this, Josh and I do, the different types of trades out there in the marketplace. Truthfully, there's really only 3 of them. Okay, well, there's 4 if you want, and then fourth one doesn't even count. You shouldn't be trading it. We have a breakout trade, right? Momentum sort of breakout, which you would break from balance, right? It's a breakout breakdown. It doesn't matter what it is, and whether it's on a micro level or macro level, it doesn't matter. Then you have a trend pullback, right? It breaks out and then it pulls back, and then we're going to see if it continues on that same direction in a small trend. Again, it depends on your time frame. Then lastly, we have a reversal trade, which we had yesterday. We had a tremendous reversal trade yesterday. And so we have that reversal trade. Now, what is the fourth one? It's called a counter trend trade. And that's not a reversal. That's just catching a knife. And I wouldn't recommend that to anybody. So there are really 3 different types of trades. And if you're able to identify that trade and what Josh just showed on the simplification, then you can establish your risk on that trigger and see if you can get that price to move to your target, which would be down at that lower node. Now, I'm not saying trade that. I'm just saying simplification is really good sometimes, okay? Because it clears your mind. It doesn't let all the crap get involved in it and take you out of a trade that could be really, really good.
Yep.
So simple's easy for me. I'm not a very smart guy, so I need simple.
Well said. All right, gang, we're top of the hour of the hour that we're going to spend together with the
bottom of the hour,
top of our time. Top of our time. Thanks for your questions. Thanks for participation. For all of you they're part of our community, be looking for progress reports later this afternoon. Cody, make sure to remind you about that. And we'll be back at it next week. I'm trying to think. Do we have big economic stuff next week? We got non-farm payrolls over this week.
I need to look at that.
Next FOMC is until the 31st.
Yeah, just a second. I'll take a look at it real quick. I have to.
All right. Yeah,
I don't think I don't think there's any. We have, is next week crop report. Let's see. Yeah, next week on the 10th is a crop report. I do know that. So if you're a grains trader, be aware of that. Guess what? Jerome speaks 3 times next week.
That's going to be awesome.
So is he on the Hill? Let me check. Nope, he's in Salt Lake City on Monday. He's in Denver go down and see him.
I should go see him.
He's at the 61st National Association of Business Economics annual meeting and luncheon. So he probably won't be saying anything there, I would guess. And then Wednesday, he is at a roundtable with the Kansas City Fed, Esther George in Kansas City, Missouri. Well, he's making the trek west to east this week, next week. So we do have Fed heads next week, but nothing really. We do have CPI, which we probably want to keep an eye on, like ISM number this week. That's a surprise. We haven't seen an ISM number make a move like that in a long time. So just be aware we're getting in that funky time frames, guys. So just watch those news events so you don't step in front of a train.
Absolutely. All right, now we've got IB high in the NASDAQ.
NASDAQ, yeah.
So 2x, I can tell you already gets you to the 77 level. And now that we've had significant balance, I may watch for a potential fade opportunity around 50, looking for a move back towards the 77.15 area. If we fail, if we start trending, the magnet 77.70, and then if we trend like that through the rest of the day, if Powell doesn't adjust that, I'm done. I'm not going to try to fade that.
I love that. If Mr. Powell doesn't adjust that for us,
if he doesn't adjust that for us. Yeah,
like we're going to the chiropractor.
ES is trying to close the gap.
Yeah, and on a Friday, I will not take this trade, guys. I'm just not going to. To me, this is not my bag of money in the corner. I'll just wait.
Right. So. That's right. All right, we'll get the recording out to everybody. If not this afternoon, probably tomorrow morning. And thanks for the questions. Appreciate it. And we'll talk to you soon. Peace.
Take care.